the rundown. Okay, Klarna. Thank you. Klarna has revived its plans for a US listing less than 6 months after putting the IPO on hold amid volatility from President Trump's tariffs. The Swedish buy now, pay later company is aiming to raise $1.27 billion with shares priced between $35 and $37 each, implying a valuation of around $14 billion. Klarna, which was once Europe's most valuable private tech company, saw its valuation slide from a peak of $46 billion after a funding round led by the aforementioned SoftBank in 2021. Doesn't always work, does it then? Just a year later, the business was valued at $6.7 billion. It then filed for a US IPO in late 2024 with an estimated valuation of around $15 billion. But in April, those plans were also put on hold amid uncertainty in the markets caused by President Trump's sweeping tariffs. In case you didn't know, Arjun joins us in the studio as well. But the metaphor is there, isn't it? You mentioned the Masayoshi Son school of thought, but we've just had a very timely reminder that all that glistens is not gold.
Yeah, WeWork was another big example, and SoftBank doesn't always get it right, but this is a prime example of that. And I think the success of Klarna here is going to hinge a lot on whether this company can convince the market it's more than a one-trick buy now, pay later pony, I'd say, and whether it can convince the market that what was once a profitable company that is now making losses because it's expanding into new markets can successfully become a larger player in fintech. It's pushing into debit cards and mobile phone services to become somewhat of a super app of sorts. And that's going to be key to whether this is successful. Now, Reddit, of course, is not always a reliable place for information, but it is an interesting place to get.
You went down a rabbit hole this morning. I saw you at your desk.
It's an interesting.
Can I quote Reddit?
Yeah, well, it's an interesting place to get the views of retail investors, right, and what they're thinking about this. And just a quick sweep. I mean, some of them were making jokes. They were asking, "Is this
brilliant.
1 point?"
The joke was brilliant.
Is the 1.27 billion they're raising in 12 easy payments? that was one question.
Love that.
But there is a large section of the community who also don't necessarily believe that buy now, pay later is sustainable. Now, Klarna have been doing this for a long time. They've proven they're very popular, particularly with the younger generations, and they've proven that they have been able to build a business that is profitable. And so the key here is, can they, one, get back to profitability eventually, and two, will they be able to successfully expand into new markets and convince investors they're more than just buy now, pay later?
Arjun, to what extent is Klarna trying to ride on the blockbuster listings of Figma and Bullish and take advantage of how those listings have gone? Yeah,
the IPO windows have not always been great in the past 2 years for tech, and that's why we've seen huge secondary share sales happening within these private tech firms. So there's clearly a window here they feel is the right time. They've been trying to get this off for a long time. So they are trying to take advantage of some of that. And we saw Gemini as well come into the market. So that's going to be key. One of the interesting things with this one, and this speaks to how tough the market's going to be, around 80% of the shares being offered in this listing are from existing shareholders. That's an unusually high skew towards existing shareholders. Now, remember, this is a company that's been around for 20 years. And so finally, these investors, which include Mubadala, Sequoia, Heartland, have a liquidity event to try to cash in some of those shares. And so I think that speaks to kind of how tough the IPO markets have been.